scientists at places like Lehman Brothers inventing complex securities, but with rather little experience of mortgages. They're all entwined, and the industry is growing very fast. I don't think it's going to end well.
There's been another house price hike, and it probably won't be the last.
In 2006, house prices had been rising for a decade. Despite fears they had gone too far, banks were still lending enthusiastically. Northern Rock above all. The captain had some reason not to slow down, let alone declare.
What would have happened if Adam Applegarth had said, look, maybe this is just a little bit vulnerable, this model we've devised. Let's cool off.
I assure you, he wouldn't have had a job. The shareholders would have seen a decline in market share, a decline in profit, and they would have said, you blew it, you know, we need a new CEO.
By early 2007, the dangers of a property crash were obvious. Yet, Northern Rock carried on lending mortgages with gusto.
Northern Rock should have been slowing its lending down in 2007 and didn't. And I think that's where I have difficulty in accepting what went on in 2007.
The growth became addictive and it just got carried away.
Correct.
For Adam Applegarth, it was still game on. But the game relied on the bank raising extra funds to lend.
Outside!
And in August 2007, the wicket became decidedly sticky. It was all down to securitization. The clever technology that was meant to allow banks to lend more without taking more risks had backfired spectacularly.
Most remarkable was this. Banks, which should have been selling securities, actually went out and bought some. They thought they were too good an investment to miss out on.
So, much of that dodgy subprime lending, it was banks the world over who were exposed to it. The risks were with them. When it went wrong, some banks were set to lose billions or even go bust.
Wholesale markets start to say, hang on a minute, you've got banks investing in this subprime, we don't know which ones, how much they've lost. So the interbank market dried up, disappeared overnight.
Northern Rock still hoped to raise money with a securitization. But no one wanted securities anymore, they were tainted goods. Suddenly, the ratings were not trusted. Even AAA meant nothing.
Securitization investors started to say, we're not just not buying subprime, we're not buying anything because we don't understand what the quality is anymore. So 2/3 of the bank's supply of funding disappeared.
As their deposits were coming due when they owed payment, they would have been checking whether those institutions that were lending them money were going to roll them over, if you will, extend them for another period of time. And they would have heard from one after the other saying, no, not me, sorry, thank you, I can't, I want my money back.
Adam Applegarth realised he would have to ask the Bank of England for a loan. And that was enough to trigger the crisis.
One of Britain's biggest mortgage lenders needs emergency support from the Bank of England. Northern Rock has problems raising money because of the crisis in the financial markets. But because Northern Rock is solvent, customers are being told not to worry.
Except, worry they did. By the next morning, Friday the 14th of September 2007, the television pictures said it all. Once the bank run had started, it was unstoppable. That's when the lack of branches really mattered. After more than 150 years, Northern Rock was finished as an independent concern.
Northern Rock didn't fail because its lending went wrong. No, it wasn't the money that came out the bank to the customers that caused the problem. It was getting money into the bank that brought about its downfall. In the good times, Northern Rock's success had been brought about by building up its balance sheet so profitably, so quickly. In the bad times, That's the way to go from hero to zero at breakneck speed.
MPs who picked over the Northern Rock debacle didn't try to spare its chief executive's embarrassment.
When did you qualify as a banker?
I'm not a qualified banker.
Despite being a market leader in the new technology of securitization, Northern Rock had succumbed to the oldest problem in the banking book. Depositors wanting money back now when it was tied up long term.